The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach we go, dear friends. And of course, the FOMC is out with their announcement. We spiked shortly to 2008 on the S&P cash. We're down at 1992, and a little bit different than I thought that this market would roll out on, and that is I thought we'd probably go up to 2,000 and get shorted into the announcement and then see the squeeze. It looks to me like they waited until the announcement and then shorted. So now we're going to start seeing the squeeze probably between now and the close of business tomorrow with options expiration. But there was being some massive bets by option market makers. And then we saw today, what did we see? Huge bets in the options and or in the futures pit for Fed fund rates, interest rates. That happened about 1. I think I saw that crossing the wire. And massive bets on that side. I think 4 million individual contracts or something. Huge volume, which told us that there weren't going to be any rate hikes today, at least. So, well, of course, we've got the little presser that will start, I suspect, what is it going to start at 2:15 or 2:30? I think it starts at 2:30. And it will go on till about 3:15. They will talk about many things. One of them they had in the announcement, which is they're looking at world events, and that means China. And that means if you like low interest rates, you've got to thank China again for rattling a little saber out here in front of the Fed. That's all they need. We did have our first real big dissenter, and I don't know if that means that we're going to see continued dissent among the Fed, but I have a feeling that this is the first of many to start saying it is time to raise. But we will continue on. In the meantime, we're about flat now coming into the day. As I said, and continue to say, way, way, way too many shorts for conditions in this market. And that means is the volume is not strong enough to accept the entrance and exit of shorts in this market. I've been saying it for a week. I'm not a Johnny come lately. In fact, probably since last Wednesday. That we were looking at being in a trading range and that we would break out to the upside. So, you know what? Not just like, what's the gal? I'm trying to remember. I'll think about it. It's a blonde lady, the singer, country singer. Anyway, she said, if you don't honk your own horn, no one else will.
I informed you thusly.
Yes, I did. So I'll pat myself on the back and break my arm doing it. Anyway, as always, we like to start off this day with a little history as we see a lot of action. 1999. Here we go, folks. It's time to wind up and listen to them squeal. It's going to happen. But first, we need a little history lesson.
And it's all just a little bit of history repeating.
Stock markets today in 1998 take a worldwide pounding and do so for several weeks after Federal Reserve Chairman Alan Greenspan tells Congress that there are no plans for coordinated global interest rate cuts. Analysts are uniformly pessimistic. They've got their little claws out there. But in 3 weeks, the stock market bottoms out and then heads straight up and into history in the dot-com bubble. And I don't know. I think we just have a lot of people that are too bearish. I like to call it too bearish for conditions. And I think a lot of people were too bearish for conditions in 1998. Of course, they had to stroll into the middle of the day and say, well, we were kind of kidding about that in 1998. We actually had to come in and do something. But they tell you one thing and they do another. They're hypocrites, just like everybody. We're all humans. And I don't know if you can say anything other than that. Anyway, we're now headed back up after the first whiplash. Probably have several of these. If you were a subscriber to my newsletter, you will not be surprised because, of course, we were watching the option market makers. We were showing you the charts of the last 3 days. And guess what? Each day, the option market makers started taking larger and larger bets that there would be a higher price. Now, you can decide what that means, whether they were going to raise or lower. I didn't care. They were making massive billion-dollar bets that the market would close higher on Friday. And they are some of the best traders in the world. In fact, a lot of people think that the stock traders are the guys that really get pushed to the head of the class. And I'll tell you that certainly they get the TV time. The people that are respected on Wall Street are the people that truly do know what they're doing in options and selling and buying them. They make so much money for these Wall Street folks that it never seems to change. And quietly in the back room, they are the ones that get the praise. While a lot of people get the glory, they make the big bucks hiding in the shadows. Anyway, 2003 on the S&P cash. Looks like we're going to go tag the high out here at 2008 in a few minutes, and then we'll see what we're doing. Anyway, options continue to point at a higher price, and I'm figuring somewhere about 2020, 2030 on the S&P cash. And what can you say? It's been quite a week. A week ago, I was being made fun of, derided, and chastised for even having the thought, actually, yeah, because it was last Thursday or Friday, and chided and even sent hate mail about my call for higher prices. I guess it's always nice to be right, isn't it? Anyway, I'm going to continue doing my superior dance for a little while longer. Anyway, not a lot else happening in news, or at least I didn't want to pay any attention to it because I didn't think there was a lot going on out here. But we'll start looking at some charts, and especially we're going to start looking at what goes on in some of these options, because I suspect we're going to have a lot of options market movement. In fact, I probably ought to show that chart so everybody can see it, if I can find it. Where's my little icon? There it is. We'll pop it on up here. I've made my own tool, and of course, we've done our own webinars on how options can help us trade during option expiration. Like any tool, whether it's Gartley's or anything else, a lot of people are always trying to use something all the time because they find it works now. They figure it has to work all the time. I wrote my first article on using options in December of 2004, stocks and commodities. So it's been a technique I've been using for over 10 years now. And each month it's like anything. You can know the physics or the theory behind it, but each time you do it, you learn a little bit more. What we have been learning, though, is that at least for the SPYs, which are what we look at to the options on the SPYs to actually look and see what we're going to do on the S&P cash. Last night, of course, we closed at around 200 on the SPYs. In fact, what do we got right now? Let's take a good look. Where's my little SPY ticker? I've got so many things up right now. Where's Mr. SPY? Come on, come to daddy. There we go. Yeah, 2092. But pain's about 2006. Normally, you will not get all the way there. And what you want to do is look at that, like yesterday, Wednesday, and see, it's about 205. You figure that these will track in. They're in my white paper, by the way. But anyway, what you're really looking for is these things to track in. So it says 2006. We're at 200. It says 206. So you're probably figuring about 203, which means that we have probably in the neighborhood of about 30 points higher in the S&P cash from what the S&P cash closed at, and that would put you at 2025. And again, these are not exact. Once you get fairly close, especially, in fact, let's zoom in on this just a little closer. What you will see, and what my chart is showing, is how much money is going to be won or lost at the close Friday when options have to be exercised. And there's a lot of logic behind it. Some people call it the wisdom of crowds. Does it work all the time? It does not, but I like it. One of the reasons why I like it is that people have to put their money where their mouth is. It's not like buying futures for 5 minutes in the morning to try to get a lot of people bullish or bearish. It's not a little cash. You put a lot of cash into it, and if you are wrong, then you will pay a big price. So it's fairly decent. And if you look at other things that are much like this, like parimutuel betting, horse racing, you will find out that about 80 to 85% of the time, the parimutuel betting at a horse track has the odds just perfectly. Over time, it's going to average out about 85. Now, a lot of people would say, well, now you can't play options because you always lose. And the answer would be yes, if you don't take into account for those months, like last month, where they go way out. In fact, I figured it out, and option market makers that were on the wrong side probably lost about 6 months of their income, or half their income, by being wrong last month. So just because something's wrong as traders, we don't want to spend our time focusing on frequency as much as we want or should on magnitude. Being wrong for a long time and then being right massively seems to be counterintuitive to most folks, but for the most part, it is a way to making a ton of cash, and even coming up with a condition that's called money out the wazoo.
He's got money coming out the wazoo.
What do we have?
Money out the wazoo.
And I suggest that you might think a little less of frequency and a little bit more of magnitude when it comes into some of these decisions. We're at 2007 on the S&P cash. What I was wanting to get to was Apple. I suspect that one of the things that's going to happen tomorrow is going to be a pop in Apple. I don't know what it's going to be, a bunch of upgrades, but this seems to be one of the charts that is better at any of them than picking these up. Am I going to be playing this? Probably not. But my guess is we're going to see this thing probably close at 117. We're what, $2 below that, $1.50 below that. It's not going to be anything for them to push it up tomorrow. We'll probably have a lot of back and forth today. I even think we might even see a little sell-off tomorrow morning. And then in the afternoon, we're going to pop up. There's going to be a bias into the close to get some of these people short out of the market.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We're going to look at some charts out here. And question from our mail bag.
I got mail. Yay! I got mail. Yay!
Yes, I've got mail. And one of the things that they wanted to know about was how long do you think that this can continue? And normally this setup would probably take us through Tuesday. We've got options rollover, and normally this pattern, you got a lot of people short. You're going into Friday. A lot of people are probably going to cover tomorrow. Their short positions, not wanting to go into it. You'll probably have a small kind of bias into Monday. And, of course, options rollover starts Monday afternoon. It'll end Tuesday. And if you bounce Monday, you're probably got about an 80% chance of a downside on Tuesday, and they will add more options. Normally, that's a pretty big bias in these markets, and it is organic. Option market makers will want to kind of flip the market around so that they can get out of positions they've had and get into new ones during rollover. And that's just part of the game out here. So look for continued volatility and swirling markets. But my guess is, or let me put it this way, my hope would be that we see kind of a little weakness going in tomorrow morning. That a lot of the option premium to the upside melts away in the morning. And then, I don't know, 11 o'clock, 12 o'clock, we start seeing shorts kind of edge to the door. They're kind of like at a party. They want to leave, but they don't want to stampede out the door. They want to be the first out because they don't want to look like they're the last to get out of the party. So look kind of like, hum, act nonchalant. They're getting closer to the door. And then pretty soon people see them getting closer to the door. And boom, pretty soon everybody's out. Premium's gone. Options, the premium will continue to melt all the way down. You'll have to have a very fast hands, a very fast finger. And you'll have to get on those. But I think that there's going to be an opportunity somewhere probably about 11 or 12 tomorrow, maybe a little earlier. It's one of these things you have to kind of play by ear, but my guess is that you're going to see those short covers by the weekend. And we've been talking about what and how a short squeeze occurs. And probably the most important thing is that you're on any stock that you're looking at over the next day is know how many days to cover there are on it. If you want to stay short, and you don't have a stock that has very much short interest, you probably have a much better chance. I continue to think that I've got a few stocks here that have massive shorts, and they really haven't moved yet. But I think probably in the next couple of days, I'm going to get the huge move out of them, not just kind of a small move. But we'll take a look at it. Now, when we've looked at these, I missed it yesterday, but let's take a look at Netflix. Had a caller ask me a couple of days ago where I would want to short this. And, of course, I'm not somebody that shorts anything for the next 15 or 30 minutes usually. But I thought that it was more than likely that what you were going to look at was a retest of the August 28th high before you probably really wanted to be short this stock. Again, because it's going to be a ripper like the biotechs are. But, just to be safe out here, you want to see probably a move back into this gap, which goes about 110 to 115. Now, if we go look at options out here, we might take a quick look and see what Netflix says in FLX out here. Actually, it's around where it says it's going to expire. Now, one of the things, though, is you've got massive shorts in this stock, and options do not tell you that. You want to put, if you see something like 50% short interest in a stock, you probably want to look at options and, okay, options say that. But we get to looking at the short interest on it, and you get something that's got as high as short covering that has to happen in Netflix. And, you can see this thing run up throughout a day and or a couple of days before it fails out. But I would not be surprised if this thing pegs 112 or higher and then comes back down to like 107 or 107.5 or something. So look for continued options volatility, of course, over the next little bit. Another thing I wanted to talk about was confluence levels. We've been talking about these from time to time, but we've got a nice market. It's holding up here. How much higher do you think we can get? Well, we're at 2,000 on the S&P cash. We'll be back and talk about that with LinkedIn in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to go to some another. You can always email me at path@tfn.com, as Jamie in Green Bay did. He sent me this. He said, last week, small speculators in the index futures had gone net short by $2 billion. They increased that substantially this week to $6 billion. That's the largest position they've ever held against the S&P 500, NASDAQ 100, and DJIA futures, exceeding the previous record in March of 1995. As I have told you thusly, or I have informed you thusly, as I have.
I informed you thusly.
Anyway, you know, I saw it in other things. I didn't have to see the article, but it was, you know, just looking at the short ratios, everybody on it, and of course, this market psychology. Like I said, we've been talking about the way things work, even when the markets blew down in 2000, right after the first of the year. You had really, I mean, the big money, there was some good money made right after the new year, but it was that March. It took almost 2.5 months for the shorts to quit shorting and then start saying it. And we've talked about it, just the psychology and the organic reasons for markets falling. And they don't fall a whole lot when there are a lot of shorts for the most part. That's because every time it ticks down, there's another short that's a natural buyer in the stock. When stocks truly move down extremely fast or when there aren't a lot of shorts and a lot of people are shorting. We've already had that. Now we have a ton of shorts, and they're all going to be looking for an easy way out. And normally what happens is as soon as they cover, the market's ready to head back down again. And how do I know this? I've spent millions being on the wrong side of the market over the last 15 years. And thankfully, I've learned something. But I don't know. It's kind of you want to believe what you want to believe. If it's better a description of anything else. For those that were in the den this morning, they heard a brief preview of my next parody. Of course, we played the last one yesterday with Janet Yellen. But I've got a new one. And I call it American Buy, B-Y-E. Anyway, I thought maybe today they'd actually raise rates, but not a lot of chance. Anyway, I'll be working on that. Maybe we'll play it tomorrow. I'm going to finish up the editing of the video for it. And I've been waiting actually this afternoon for the latest version, one that they made just a few changes on. I'd had to make it just perfect. So we'll be premiering that either probably Friday, tomorrow, and or Monday. But I'll have a neat video out there about it. And it's all about the end of QE and the end of easy money policy when it does happen, even if it hasn't happened yet. Anyway, we're talking about confluence levels for those that are new to TFNN, have been around, or maybe haven't read Joe DiNapoli's book on it, which is the original work on it. Tom O'Brien's done a little bit more work on it and put it in his book. I think his book's about half the price of Joe DiNapoli's book, so probably a better value. But LinkedIn gives us a good example. When you start seeing these markets move like this, a lot of people want to short on the moves up. But once you start getting them, there is a technique that works better. And that technique is called confluences numbers. And it's just using Fibonacci numbers together. Now, I have some rules for using those. And one of those rules is that you want it over time. And time is not a couple of days. Time is weeks and months. If you see my chart here for LinkedIn, I'm going to zoom in a little bit farther. You're going to see kind of a little bit better view of what confluence levels do. But even stocks that are been as beaten as bad as LinkedIn will show you that they've got the ability to bounce back up. Now, I don't use just one technique, but I think that there are several techniques that you can use, but Confluence will confirm some of these. Now, in this one, I'm using the February 26th high as the first input. The second input, and Joe DiNapoli called them Fibonacci nodes, but the second one is July 21st. So we got some fairly decent amount of time between those, right? And of course, if you look at the what he called the focus number, which is the Fibonacci retracements off both of those, I'm using the August 24th low, the 165.57. Now, when you use these, there's going to be a range between the 618 of one and the 382 of the other. And when these things are incredibly narrow, they work incredibly well. So on this one, you got about a 50-cent range at $207. Now, what happens also $270? This giant gap down from the 31st of June with 10.3 million shares. Now, you know, we're doing millions of shares, 2 million of shares over the last few weeks. This thing's probably going to get back up right to that 207 level, maybe on this move. But you also then have 10 million shares down of people that want to get their cash back that bought this thing when the wheels fell off. And if you are bearish in this market, just know that especially when people get hugely bearish, you want to wait until you get pretty much all of this. And that ends up making a 618 retracement on the last level. But when these things really get put together and you see the 382 of one and the 618 of the other ones, and these things are, I like to say 1%, maybe 0.75%. So on a $200 stock, that'd be like $1.50. If they're bigger than that, what they tend to be is a congestion zone where the stock will get into it and it will kind of try to make its way through it and stutter and go back and forth and move additionally slowly, but it will be erratic. It's not a wall. It's kind of a moat. Maybe you could swim across it, maybe a better description of it. But when these things are incredibly tight like this, and what is that? 2007 and 35 cents, and 207 and 82 cents. What is that? 50-cent move? 40-cent, man? 35. Yeah, 35. 37 cents. That is amazingly good. What you would normally see in these moves, if you didn't want to think LinkedIn is the wheel's going to fall off LinkedIn once again, is a pop up into that area. You want to see the thing kind of pierce that confluence level. You want to see a lot of people come back in and either start selling and or shorting on that and get a nice candle on that day to come pick it up. And then, of course, you get your one-to-one ABC down, and you're right back in the gear. And then, of course, on this one, it's 50, 60-point moves. And what do you have on the last one here? 165 to 330. What is that? 35, 60, 68 bucks. 207 would take you back down to 104 or 140. So 135, something like that. So at that point, you want to start looking at these markets a little bit farther back. And guess what you've got out there? 136.02. You got a high volume untested low. That's the May 7th, 2014. So, when you're playing these, just think a little bit more long term. I'm not a big short term trader. I used to be. It just seemed to me a lot of work. And I trade less and learn to spend all the extra cash. Just my thoughts. Anyway, we've got other things going on, so let's check back into the markets. We're at 2006 on the S&P cash, 2.5 billion shares, and every tick up makes me feel like doing the superior dance out here. Again, you can email me at path@tfnn.com. You can call me at 877-927-6648, and you can post a message in the den if you like. In fact, I'll try to check it real quickly. Dave, can you look at CYBR? Well, I certainly can. Doesn't tell me what he wants to do with it. CYBR. President was talking about this with China, not lately. I think a lot of these stocks probably have hit some kind of bottom out here. But let me turn that off so you can see it a little bit better. But, you had this huge gap up and sign of strength on the 17th of February. This thing gapped up on 5 million shares. You went back and filled it on that August 24th day with 3.4 million shares. You popped right back into the trading. You've come back up here. You've got a nice little pop here today. Fundamentally, I think these companies have a bright future above them. Where you're going to make a lot of cash in these stocks is when they change the laws, which we may see very shortly. Those laws will mean that CEOs are responsible for their systems being hacked, that the companies are going to be responsible. And, that's really going to make these companies turn the corner. I think they've learned at the levels that they're doing now how to make money, and at least not lose money. They were trying to expand probably a little bit too wildly, and why they've come off their high. But now they're cutting costs. They're doing all the right stuff. Now, as many of the stocks and technology are, headline driven, and that headline's going to be someone introduces a thing to make the CEOs responsible. And when they do that, they're actually going to start buying stuff. You saw a parallel to this in the fast stops, the C-stores, convenience stores, gas stations. For years in the 80s, a lot of them did not have closed-circuit televisions, and they would get into lawsuits. One of the things I built in the 90s was a digital disc recorder that's kind of like everything we see now today. Back then, it was rather groundbreaking. but it was called, I built it, and it was called and designed, it was called a Digital Detective. And it was a 4-channel video recorder for these convenience stores. And we sold a ton of them to rallies across the country. But what had happened early in the mid-90s was they lost a lot of lawsuits. And once they did, they started actually spending the money on getting high technology. Today, I bet they probably have super high resolution cameras in HD and a lot of other things. And all the video is probably uploaded directly to the cloud so someone can't steal the hard drives from them. But it took them being held responsible. Probably the last thing that big companies ever spend money on is security. If they get stuff stolen, that is just part of their shrinkage number. They always look at security costing more than it should. They just feel like they shouldn't have to spend any money. Let me put it this way. This is the last thing they want to spend money on. But at the point that they get embarrassed, it becomes a much bigger issue. And I suspect that the big rise in these companies is going to be the change in legal issues. But I think they can do well even now. And I think you had a false breakout to the bottom. You certainly broke out to the bottom on lighter volume on that August 24th on CyberArk. And I would say that these things have been kind of washed out. Well, I tell you what, I blink for 1 second and we're up to 2016 on the S&P cash. Come to daddy, folks. Come to daddy. The only thing I said that I wished was that I got to pull back tomorrow morning to buy some calls. But maybe just going to have to sit probably with what I have now, an embarrassment of riches and the admiration of my listeners. What else do we have out here? Okay. Majority of FOMC sees rate hike by end of year, which I think is okay. No mumbling? I've got to mumble. I mumble when I have to do something else because my engineer then complains that there's dead air. So he has the choice of either mumbling or dead air. 2018 on the S&P cash, 2.6 billion shares at 248. So we've got about a minute before the break, 220. Again, that 230 is probably out there. Maybe we're going to hit the high today, and we'll see everybody scoot before the end of it. Anyway, that was one of them. I wanted to get to another one out here so you can see the same thing in Mattel. Is it in Mattel? Yeah. Now, this one's a little wider, but it's a good example of confluence levels, and we're right there. So I'd probably not a stock I would like to short going into fall and toys. And this is probably one that would, if this I had to set up in spring, thinking that Christmas is a little ways, this would be a little bit better. But same kind of thing in Mattel. When we look at this, the April 24th high sets you up at $30.44. And your next input is the June 18th high at $27.33. You get your focus number down here at August 24th, $20.50. And your 18 retracement takes you up to $24.72. This one's got about 60 cents, 40 cents, something like that between it. But watch Mattel over the next few days. You should have fairly decent resistance. Even if you just look at the candle from June 17th, you're going to see the same thing. Anyway, we will be back in a moment.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We talked about Apple starting to move, and it's now down about 9 cents at 116.32. As I said, look for that thing to probably get very close to pinning itself at 117.50 tomorrow. We talked about that yesterday, so it's nothing new. 2017 on the S&P cash, 2.7 billion shares. Again, the question is, are they going to let these shorts out easily? And the answer is no, nay. But that would be it. And see what else we have coming in. Got a comment from Andy, and I will say the answer is yes to that. So what else do we have out here happening? I'm going to just take a quick look at some of these other stocks. I mean, there were a lot of stocks that it could be short. And, you know, we were looking at the IBB. I didn't really have a good read on it. I certainly wouldn't have been short. But we were talking about, in fact, one of my customers had bought, we were saying buying options off the bottom. And it ended up being one of those things where the question was, where were you going to start finding the original or the most cash? And, we saw this thing really move sideways. Let me zoom in here a little bit farther. And let's catch that scale over there. Anyway, he had bought it. And I said, well, if you wanted to do a 618 retracement, that's probably where you logically were going to take your money. Now, this had a gap, and that gap happened on the 20th of August. But, you're going to probably see a lot of these gaps fill up. I wasn't bearish on the IBB. In fact, if we look at the BIIB, which was what I was short before, really yesterday you started seeing these things that could not really find a level. But here's another good example of a lot of these stocks that kind of slow down as they go through confluence levels and then move higher. But even this dog that got pounded down has got a previous high, and that's 338. And your odds of pulling the trigger on some of these stocks are going to be much higher. But with gaps like this, you have a big tendency to see even more of them filled than not. This has a double gap. If you go back and look, it's got about a $15 gap in it inside a $40 gap. And that's the one that we were short on this thing when it blew apart. We had the puts. But it is one of these things where you want to see a lot of that filled, especially when markets act like the wheels have fallen off the wagon. Whenever I guess I'll go back to this, and I said it in my newsletter when everything blew apart on that 24th. And it's probably the best piece of advice you will ever hear. And I read it, of course, in Reminiscence of a Stock Operator. And that is that when you run into severe demoralization in the market, it's time to cover your shorts. And I couldn't find anybody that wasn't predicting the end of the world. But as I've said it before, it was the end of the world, but I felt fine.
It's the end of the world as we know it. It's the end of the world as we know it. It's the end of the world as we know it. I feel fine.
As we said, I always like to go kind of against the grain. If I'm feeling real depressed, then I think maybe it's time for the market to go higher. If everybody's euphoric, maybe it's time for it to go lower. In the meantime, sell when you can, not when you have to. Cover when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.